Thank you so much for being here. Welcome to our third session of the day. We have a seminar called New Trends in Forex and Crypto Industries, hosted by the wonderful Artur Azizov, the CEO and founder of B2Broker. Exactly. I'll keep it short and sweet, so let's begin. Thank you, Artur.
Thank you, Rachel. Yes, sound check. 1-1. Okay, hello to everyone. As Rachel said already, my name is Artur. I am CEO and founder of B2Broker group of companies. And today I would like to raise a very important topic about new trends on crypto and Forex industries. So, first trend that I would like to speak about is perpetual futures. Everybody knows about CFD, no need to explain here what is the advantages and disadvantages for the brokers and traders. Everybody knows about spot on the crypto, and the new trend is perpetual futures. So, first of all, the difference between, there are some differences, right? But the major difference between CFD and perpetual futures that on perpetual futures, there are two types of margins. So initial margin, it's usually takes like 15 minutes, pre-check margin, and then after 15 minutes, it comes with maintains margin. So this is the first difference from CFD, and the second difference, it's about funding rate. Usually on CFD, guys, as you know, you charge your clients as a broker once a day, and you call it swap or like charges. And on perpetuals, depends on exchange, of course, because some exchanges, they do charge their clients the funding rate every 8 hours. Some exchanges, usually they do charge once a day, but many exchanges, they do charge like every 3-4 hours. So it depends on the funding rate. Sometimes it might be positive for the traders, and sometimes it might be negative. And if on CFD side, mostly of the time, especially for the crypto CFD, brokers apply negative swaps or negative charges. On perpetual side, on perpetual futures, it's of course like 50-50, and even positive charges sometimes more often than negative. And of course, perpetual futures, they use as an underlying asset, they use spot pricing, and they use order book, and traders, they can make some kind of arbitrage between spot and perpetuals. Of course, here I should admit one thing. Why these perpetual futures appeared on the market? Because, as you know, the crypto-oriented users, they some kind of don't like Forex brokers, you know, like pure crypto-oriented users. And exchanges, they had to invent something that is very similar to CFD, but at the same time, it's much more simpler than normal futures. Because if you go to, I don't know, let's say Binance Exchange, you can find like normal futures with expiration date, and you can find perpetual futures. The logic behind these perpetual futures, it's very similar to CFD, but they couldn't call it CFD. Otherwise, the traders, they would deny on this instrument. But at the same time, they had to invent something which is more simpler and more convenient for understanding for crypto users, because there is no expiration date, and this make very similar CFD to perpetual futures. Now it's very popular, and market depth in the order book for perpetual futures, it's much more better, like there are more volumes, and that's why traders, they like it. And of course, there is, you can choose one base currency, which all your P&L will be reflected in this particular or your chosen currency. It might be USDT, USDC, or for example, if you go to BitMEX, it will be BTC. So next trend, it's stablecoin growth. As you know, guys, now it's a tremendous growth of stable coins, and already a lot of transactions, a lot of brokers, they started accepting these stable coins. as a payment methods. And if you take a look, my presentation I had a speech in 2018 about stablecoins, and at that time I predicted already that stablecoin that's the future, because Bitcoin, Ethereum, and all crypto assets, they became more as investment assets instead of like transaction assets. Of course, Bitcoin still remains as a pure decentralized crypto, which is stable coins. It's not decentralized token. It's a centralized tokens based on decentralized blockchains. What does it mean? It means that emittent who is behind these tokens, in other words, the issuer of these tokens, they can block addresses or wallets with your tokens. This is why all these stable coins, except decentralized, they are centralized tokens based on decentralized networks or blockchains. For example, Ethereum, Binance Smart Chain, Omni, and Tron. This is the most four popular blockchains for the stable coins and for many other tokens. I personally divide all the tokens by three main categories. It's regulated stable coins, unregulated, and decentralized stable coins. Regulated stable coins, and one of the most famous stable coin, it's a USDC. Market cap now, it's already 28 billions, and they released this stable coin October 2018, which is exactly 3 years ago. And for 3 years, they already reached the point 28 billions. Why? Because all the institutions, this is United States regulated stablecoin. And why they are regulated? What does it mean? It means that there is the trustee company where emittent keep or holding all the funds in dollars, and these dollars, they backed by this USDC, which means if something happens on the market and all crypto blow up or just market will crash, anyway, this emittent, since they have the obligation to all participants or to all the institutions who bought their tokens, they are obliged to redeem your tokens and to give you back your dollars. This is why they call them regulated stable coins, which means you can feel safe no matter what's going to happen on the market. But there is also disadvantage. As I said, since it's a regulated stable coin, it's centralized stable coin, the emittent, they do their own check in their way. And very soon already, maybe guys, you read the news just a couple of days ago, in Congress, the US President administration, they already submitted a suggestion to Congress to start regulate stable coins and apply to them banking regulation. Of course, unregulated stable coins, nobody can prove that they have $67 billion backed by this market cap. This is why USDT, like we call them unregulated stable coin, because you never know what is going to happen to them or what might happen in several years. Of course, I don't think that such tremendous amount will not support in case something happens. But also, this Tether, it's a very well-known stable coin because they have a very deep relationship with Bitfinex, and CIC, they were chasing Bitfinex at some point, but now they resolved the case, and this is why they keep growing USDT. And now, as of today, it's already 67 billion capitalization. And in terms of transactions, the many brokers and all the banks, they even realize now that they already lost around 3-4% of global transactions, because all these 3-4% from the fiat transactions, they moved to stablecoin transactions. Now, even many brokers, they started accepting cryptos because card processing companies, especially for the high-risk business, they charge you 5%, and they keep sometimes 5–10% as a rolling reserve. So from every $10,000 that you receive from your users, typically you lose from very beginning 15%. And also this 10% rolling reserve might be returned to you back in some time, and also you get settlement in 2–3 weeks usually. Here in stablecoin, you are the bank, so you control everything. You receive the funds. There is no chargeback. There is no any kind of rolling reserve, because, as you know, the biggest problem that happened in China, that when the traders they were opening different positions into brokers, and where they lost money, they made a claims to police in order to receive this money back. So they were making like double profit. So decentralized stablecoin, it's a bit complicated logic behind the smart contract of this stablecoin, but the thing is that since it's decentralized, they cannot block your transaction or the wallet. This is why it keeps growing, and it's already reached 6.5 billion. So we believe that stablecoins will continue their growth, and already, I believe maybe 30–40% of the brokers, they started accepting stable coins, and moreover, some of the brokers, they even pay bonus to their clients if the users fund their trading accounts by stable coins. Because of this problem with card processing companies, here they lose 15%. From very beginning. Here they pay to user 1–2%, and they don't have any kind of risk with the chargebacks and so on. So next trend, it's a blockchain evolution. So as you know, guys, Bitcoin and especially Ethereum, at some moment they were experiencing so many problems, and especially now Ethereum, if you remember the April, when the Ethereum blockchain at some day it was just stuck. It created the huge queue of the unprocessed, unconfirmed transactions, and every new transactions, every new sender, they were trying to increase the gas, and they created like competition between themselves, and blockchain just stuck for a couple of days. So Solana, they came with the solution, because all the blockchains, as you know, they use proof of work, such as, for example, Bitcoin and typical blockchains. Then new blockchains came to the market, and they started using another approach. It's called proof of stake, which means the validators, it's not the miners. Validators are the just crypto holders who keep some amount of cryptos on their wallets. And they can be as a validators of the network of this particular blockchain. And Solana, they came with the solution. That's why now it's one of the hot topic on the market. They came with the solution, proof of history. So it's a bit complicated logic behind this. I just will try to explain the basic stuff. Of course, if you are interested in, you will Google this and you will understand the logic behind. But the thing is that it's a proof of history. It's completely another approach, and this is why they can work much faster than Bitcoin and any other blockchains. As you can see, they state that they can process 700,000 transactions a second. So they even stated that they are faster than Visa and MasterCard. Can you imagine this? Nobody can prove this now. We will see this only through time, right? But that's what they are saying. And Solana, basically, they came to the market because they want to resolve one very major problem with the small transactions. Because as you know, guys, due to the high commission on the Bitcoin and Ethereum, for example, right now, average commission on Bitcoin, it's $8. So what you're going to do if you want to send somebody $5? You want to buy just water in the store, right, through Bitcoin. So it's impossible to do now because you got to pay $8 in order to spend $1. This is why Solana, they want to try to process transactions in a very cheap way. Then Ethereum 2, second version, now it's a transition period. Just recently, maybe a couple of weeks ago, they released their London hard fork, and they are moving to proof of stake. So it's already implemented proof of stake there, but it's still not working as they expected. But you already, on the second Ethereum version, you can already stake 32 Ethereum. So, for example, if you want to become validator of Ethereum 2.0, so you can create as many addresses as you want, but every address has to have 32 Ethereum, then you will become validator. Polkadot. Just a few words about Polkadot. It's also a very hot topic now on the market. The thing is that they're gonna release blockchain of blockchains, which, what does it mean? It means that you will have master chain, and based on this master chain, you will be able to launch your own blockchains. So it's a pretty advanced system. This is why Polkadot now it's also new trend. You see all these blockchain competitions, they try to be better, they try to attract more users, they try to attract more companies to use their blockchains for their smart contracts or for any kind of transactions. Evolution crypto market, I think nothing to comment here. 1,500 times for 8 years the market grew. The only one thing I want to emphasize here, it's the difference between CBDC, which is Central Bank Digital Currency, against like stablecoins. Stablecoins, as I said already, it's a centralized tokens based on the existing decentralized blockchains. But CBDCs will be based on the master chains, which means it's a centralized tokens on centralized blockchains, which means the central banks will control everything. So they can block transactions, they can cancel it, they can do whatever they want. So it's only blockchain, but the logic will remain the same as they have now. DeFi platform. So DeFi means that you can execute any trades, any deals without third-party involvement. Now it's a new trend. It's a hot topic. Everybody is talking about DeFi projects. Now, but the thing is that in a traditional finance, if you don't trust like each other with your counterparty, so you gotta find someone who you both trust, and then you can execute your deal. Here in DeFi logic, you can put in smart contract everything you wanna proceed with, and you don't need like any kind of third party here. And one of the first kind of DeFi project, it's a staking. But please don't be like mess with that, because many platforms now they offer staking and they present, for example, staking for USDT, for example. But it's not a pure staking. It's not a staking. They round the market like two types of staking. The first type of staking, it's a pure proof of stake staking, which means you can like hold your money or hold your crypto on the wallet and become a validator of the network, and you can gain commissions but just keeping this money because you are validator, and then more crypto you hold there, then more revenue or percentage commissions you generate. And also there are many other platforms. They claim that they are like they do provide like staking solutions, but in reality they use your crypto, for example, stablecoins, in order to give in order to use your stablecoin as a collateral, for example, for the margin trading on the spot. Of course, they charge, for example, 20% for the margin trading on the spot, and they share with you, let's say, 10%. This is why they call it staking, but it's not pure staking. Lending platform, same, it's also DeFi platform. Decentralized exchange, just a few words about this, because I'm running out of time already see this. The thing is that decentralized exchange, why they are so popular? Because there is still huge arbitrage opportunity. And many traders, they use these decentralized exchanges in order to make arbitrage between the spot exchange and decentralized exchange. But the disadvantage of this, that many regulators, they already started chasing all these decentralized exchanges because they don't require any KYC, they don't do any kind of IML, and of course, all the stolen tokens or coins, these hackers, they do exchange through decentralized exchanges. So that's why there is the positive and negative things about decentralized exchanges. And there is no order book, it's going through the smart contract ever since. The last slide, guys. It's my favorite trend. It's about ecosystem. So I think everybody heard 50 times already about these ecosystems, but we believe in ecosystem as well, and that's why we, as a B2Broker group, we try to build also our own ecosystem. And I see many other companies, they also try to build their ecosystems. They have a retail brokerage, institutional brokerage, crypto, different platforms, and so on. What we achieved, we have a technology direction where we build and we develop our software solution, and then we provide to the other brokers, exchanges as a white labels. Also, we do run our payment business. Last year, we received approval from FCA in London, so we became also FCA regulated digital bank, full AMI. And also we do run our B2B in Pay, which is one of the well-known cryptocurrency payment provider. We provide solutions for merchants, for enterprise clients who want to launch, for example, their wallets, crypto brokers, or crypto exchange, where you don't need to exchange all these coins and tokens. So we provide to you access through one interface to all major blockchains, stable coins across all the blockchains and all the tokens. And you can implement there any tokens in just 2-3 minutes. Also, we just launched recently our B2Broker venture fund. It's a M&A project, so we are looking for new technology startups who are developing different software solutions related to trading, crypto, and Forex industry. And of course, we do run our liquidity business, so we have licenses in certain jurisdictions. Now we have 9 offices in the world, and B2Broker, as of today, it's more than 230 people. So I'm running out of time, guys. It was really nice to have a speech with you, and I hope that you found this information pretty helpful for you. We are here on the expo. If you have any kind of questions, please, we will be delighted to answer all your questions. Thank you very much for your attention, and stay in touch. Thank you. Bye-bye.